Hello and welcome to the look ahead for Tuesday, the 12th of November, with me, Fiona Cincotta, Senior Market Analyst at City Index. So tomorrow, straight up, we'll be looking at UK jobs data, also have German inflation figures and ZEW economic sentiment. In the US session, watching out for the OPEC monthly oil report, as well as listening out for several Fed speakers. So just kicking off with UK jobs data, expecting unemployment to tick higher to 4.1%, up from 4%. Wage growth, excluding bonuses, is expected to fall to 4.7%, down from 4.9%. But including bonuses, expected to rise to 3.9%, up from 3.8%. Now, we know the Bank of England is watching wage growth figures quite closely because it's intrinsically linked to service sector inflation, and service sector inflation is proving to be a little bit too sticky for the Bank of England's liking. They would like to see that ease further before, in order to be able to continue cutting interest rates. Obviously, the Bank of England cut interest rates last week by 25 basis points, as did the Federal Reserve. But we saw a little bit of caution from the Bank of England as far as rate cuts are concerned, just following on from Labour's budget, which Bank of England Governor Andrew Bailey said it to be inflationary. Inflation tick higher by 0.5% at the peak next year. So here we go. We're looking at sterling US dollar. Now, I think the big story here still, actually, we do have that data from the UK, is actually US dollar strength. We've seen US dollar strength rip higher again today, adding to gains from last week as that Trump trade continues, where we also saw stronger than expected consumer sentiment in the US at the end of last week. Got expectations that the Fed is going to cut rates more gradually, owing to potentially inflationary policies from Trump. We've also seen this solid data come in from the US. We've got a US inflation data due later this week. So this is the chart, sterling US dollar. We've obviously had this bearish trend. We're fallen below the 130 level that we've been watching out for, fallen to a low around this 128.60, which is the level that's really just supported sterling across the beginning of November. We've also seen this level sort of come into play around there, as well as the 200 SMA at the 128.30 level. So we're in this sort of zone of support. Now, the outlook here, I think, is bearish in the sense that we're below this trend line, which has been going back to the middle of the year. We're also below that key 130 level. So we've also got the RSI below 50. So we're going to be seeing how sterling US dollar reacts to this support. If we're going to break below this support, particularly below the 128.30, so 128.20, the 200 SMA, then we could see a much deeper sell-off towards the 126.70 level, which was a level that we last saw in August. Should this zone hold, then on the upside, 130 is the key level. We need a break above 130 and 130.50, which is the November high, in order to create a higher high. Now, we've also got data from Germany we've been talking about. The inflation data is secondary. It's the second reading, so it's not expected to be as market moving as the preliminary reading. Expected to confirm that inflation in the region was 2% year on year. Also got German ZEW economic sentiment, which is expected to just slow down slightly to 12.8, down from 13.1. But I mean, basically, again, this is the euro US dollar. We're seeing this sell off in the euro US dollar on the back of US dollar strength. A combination really, not only US dollar strength with the dollar index trading at a 4-month high, but also concerns over what trade tariffs might mean for the European economic growth, which is fragile anyway. And maybe that will mean ECB needs to cut rates more aggressively in order to support the economy. Just having a look at the chart here, we've fallen away, run into resistance there at the 100 SMA, took out the 200 SMA, 108, also 107, and also this level here, which was the 106.70, which was the June low. Hasn't quite made it to testing the 106 level. That's the next level on the downside. RSI supports further losses. So that's levels to be watching out for on the downside. Now, if we get a break below that, then that could see a deeper sell-off into this level here, which is 104.50. So getting a little bit closer to parity when we start talking about those levels. On the upside, as I said, first of all, we need to get above that 106.70 and the 107 level, and then we've got that rising trend line support, which goes back to 2023, which is around the 107.80 level. So just picking up here with oil now, as I mentioned, we've got the OPEC monthly report, which is expected to be released. In the previous monthly report, we saw from the IAE and from OPEC downward revision for price forecast and demand forecast. Obviously, we're getting this pretty big reaction in oil today on the back of not only the stronger US dollar, but also disappointment regarding Chinese stimulus, which was announced over the weekend, which was a bit less than what perhaps the market was hoping for. It was just aimed at supporting the heavily indebted local governments rather than actually doing anything for consumption in itself. So that's helped towards the sell-off. Now we've also got easing concerns over supply as Hurricane Raphael starts to weaken and supply is expected to come back online there as well. We're just heading down. We talked about this level quite a lot, 67.50 level. That's what we're watching out for around here, 67. Yeah. So if we get a break below that, then we're going to be watching out for this one here, which is the 2024 low, which is the 65.50 level. 65.25 level. So, and if we get a break below that, then we're looking out for the 63. This one that we saw all the way down here back in May 2023. That was a level of 63.65. So that will be the next level to watch on the downside. Should we break those other support levels down? But it is, as we say, still within that relatively familiar channel that it has been trading in. On the upside, 71.50 to 72.50 is the level that we'll need to break above in order to get towards that 75 level. So I hope that you like what you've seen, and if you do, then please do give this video a like, and for more videos like this, please do subscribe.